welcome and a very good morning. You're watching Buy Now, Sell Now on ET Now, a show where we are going to be taking all your live queries via WhatsApp, via live calling, and get them answered by our experts to help you shape your portfolio better. Before we do that, just talking about the listing of the day, and one of them is Shankesh Jewellers, listed on NSE with an uptick of about 11%. That's the kind of premium we've seen, and the stock is holding on to gains. We've got the management of Shankesh Jewellers joining us on the show, Mr. Mahavir Jain, the whole-time director at Shankesh Jewellers, joining us. Mr. Jain, good morning, and first of all, congratulations on your listing. And now that the company is listed on the bourses, can you share with us the kind of growth that you're penciling in on the top line for FY27? Can we assume it to be in high teens?
Hi, good morning, and thank you very much for having me here. First of all, I'll take this opportunity to thank all the exchanges, the BSE, NSE, SEBI, our investors especially, who has shown this trust in us, and we've got listed today at the Bombay Stock Exchange and the National Stock Exchange. Yes, we have been continuously been in focus with handcrafted jewelry, and with the same we'll carry on forward in the coming future as well. So let's see where we see a good growth coming in the future as well.
Quantify that growth for us, Mr. Jain. Would that growth be in mid-teens? Because since last year in FY26, you did grow at a range of about 15 to 16%. Can we expect to see this mid-teens kind of growth continue? Can we expect higher teens?
So yes, as we move forward ahead, this growth, we expect it to continue at a better rate, and we've been growing all these years as well. So we expect the growth to continue in the coming future as well.
So now with the business catering to large organized jewelry retailers, how do you see customer concentration evolving? And what really is the opportunity to add more marquee clients?
See, obviously, India is a very big market for jewelry, and I would say that I'm a very small part yet to cater all around India. But as we can see that all our retail chain partners are growing at a pace, and they've been increasing the number of stores day by day and increasing their presence all around India. A customer from Maharashtra is going to South, South is coming to Maharashtra. So obviously when we cater to them, we see the growth coming into us as well, because we supply them with our jewelry, what we make daily, because our design focus is totally on handcrafted, and that's the need of the hour today.
Understood. So that expansion is going to be aiding your business as well. Mr. Jain, I'm once again coming to the financials, just trying to understand your EBITDA margins. We've seen very sharp expansion from FY24 to FY26. Currently at about 9.5% is where your margins are. How sustainable is the current margin profile, and what could drive further margin expansion from here? Would FY27 margins by any chance cross 10%?
See, technically talking about the numbers here, I would say that our focus has always been more on the design focus and our customer service focus, and scalability has always been the focus. But when we go about numbers, gold prices have always helped us in getting some portion of this numbers. So let's see that these numbers stay intact in the coming future as well.
All right, Mr. Jain, since you mentioned gold prices now, they do continue to remain volatile. Are you seeing any change in jewelry designs, carat mix, order sizes, or even perhaps, consumer demand from your customers?
Yes, indeed, we've seen in the last 3 years, if we see that our 18-carat growth has almost grown to a humongous percentage, because with the current gold prices increase, and Shankesh Jewellers was always ready in advance to be developing our handcrafted designs into 18-carat as well. So we got the first mover advantage in the market as well. So our growth has been good, shifting from 22 carat to 18 carat in the last 3 years, and in the future as well we see 18 carat growing towards a handcrafted jewelry.
Understood. And Mr. Jain, a large part of your IPO proceeds is going to go towards reducing your debt. And once the balance sheet is deleveraged, how much will the debt on the books be? And then where do you see the biggest opportunity to deploy more capital for growth?
So technically, yes, we will first do the repayment of our debt, whatever's there in the books for now. But whenever in the coming future, the company is needing some more funds, there is always a space to get in the debt again. But and right now, as the working capital requirements also, you see, they've been increasing day by day. So that those gates are always open for us in the future as well.
All right. Now, Mr. Jain, what is really the opportunity that you have to expand beyond your current pan-India customer base, particularly into newer regions, or or perhaps looking at export markets?
So right now, if I say India is a huge market, as I said you earlier as well, that India itself is a great consumption of the kind of jewelry what we make in right now. And talking about the customers what we have today, the retail chains do have showrooms outside India as well. So we can say that we have some presence outside India as well, because that jewelry is being supplied to those chains as well. So right now it's an indirect export. Let's see what the future brings in for us.
Okay, and here's watching out for that as well. Lastly, Mr. Jain, how much headroom do you have to scale your manufacturing capacity? Are you looking at any capacity expansion plans anytime soon?
So as we talk about handmade jewelry, it needs a lot of new minds to make it, and it needs a lot of different hands to make it. So we've always followed the asset light model what we follow, and working with contract manufacturing. So that's what we see in scaling that only in the near future also.
All right, Mr. Jain, appreciate your speaking to us on the listing, and congratulations on that listing. Thank you very much for being with us. And in fact, let's begin taking your queries now. And joining us right now is Kunal, of course, is with us in the studios. And we've also got Rajesh Agarwal joining us from AUM Capital. Both of you, gentlemen, good morning. Thank you for being with us. All right, before we take up some WhatsApp queries, Kunal, a very quick view on how the markets are doing today. I mean, the Nifty, of course, trading with cuts since it opened.
Yeah, it's an expiry day. So it's bound to be that the markets or the indices are bound to be a little bit more volatile than usual. What we've seen the last few days, the range for the index, for the Bank Nifty specifically, today has expanded a little bit more. We were at a point where the Bank Nifty was down some 100 to 100 points earlier, and now we've come back into a flattish kind of a terrain for the Bank Nifty. The market breadth is a little bit disappointing than what was maybe in the last few days back, because we were holding on to that slight positive towards a flattish market breadth. That's the one which is negative. However, I think today is the expiry day. So today is going to be a day where, for the first time, I think on the cash basis, we might see the closing. And we need to see how the expiry pans out in the last half an hour. So it's bound to be that the markets for the next couple of hours going to the special expiry session, I think, could be a little bit more volatile.
Okay, a little bit more volatile. That's the kind of outlook that we have for the rest of the trading day. At least that's the view coming in from Kunal. The Nifty Bank looking slightly more resilient. It's been flipping between the green and the red. Right now trading with cuts of just 0.1%. But on that note, let's get started with all the viewer queries. Our first query is coming in from Mr. Vinod Tajan from Bengaluru, and the stock name is Grow. We've addressed this query yesterday as well. Let's shift on to the other query. And the next query that we are talking about is coming in from Mr. Vinayak Sardesai of Nagpur, and the stock in question here is Delivery, quantity 500 shares, entry price at 516 rupees per share. Let's try and get a mixed view coming in over here, a more holistic view on both on the fundamentals as well as the technicals. Rajesh, you go first. Your view on Delivery and the overall logistics space?
Good morning, everybody.
Good morning.
As far as logistics space is concerned, I think going forward with the kind of growth which we are witnessing in e-commerce space, these kind of companies are going to do well. But we should not forget that the competition is increasing in this space too. It's a long gestation period to companies to come into give positive numbers. So yes, that will take some amount of time. But at these prices, I think these things have been discounted in prices of delivery. It's already down almost 20-25% from its recent highs. So I think one can continue to hold at these levels for a target of maybe 500 odd rupees in the next 1 year.
All right. So the next question that we have is coming in from Gandhinagar, and Deepak Dave is writing in the stock in question, of course, TCS. The quantity he's holding is 70. NT price is 3,200. He wants to know, should I hold or add? Of course, TSCS also, in the news today on the back of that deal with Porsche. What's your sense on this one, Kunal?
See, I think on TCS, I would suggest to hold on to the stock as of now. I would not suggest to average out further. Your entry price is a little bit on the higher side, 3,200. The stock is at 2,200 levels. But I would suggest to just wait for a breakout about 2550, 2600 mark for TCS. This could be a big breakout point for the stock price. It looks like that maybe this time around, the stock, say in the next few weeks, couple of months, would try and come back into that retest, as well as the breakout of 2550, 2600 levels for TCS. But I would suggest to just wait for that confirmation. Because of the fact that the stock and the sector has gone through a big negativity. Today's positive news also for TCS has not resulted into any kind of a uptick into the stock price. So I think I will just wait for another few weeks. Suggest to average the stock once the stock crosses about 2550, 2600 levels.
Right, that's on TCS. Kunal, regarding the previous question, wanted your technical view on delivery as well. What would the outlook over there be?
See, I'll be bullish on the stock for delivery, I think, and specifically from a medium to long-term perspective. I think the stock seems to have formed a major bottom at the 300, 330 levels last year when the stock had tested this zone. And from there, it's moved on to that 400, 500 plus mark, where the stock recently tested the 500 levels. So I would sense that this 450 mark for delivery is like a pivot. The stock may swing around this level, but there could be a possibility that in the next 6 months, 1 year, the stock should be able to surpass levels of 500 and go beyond that.
Okay, that's on delivery. Let's go ahead with the next stock. And Rajesh, this one is for you. A query coming in from our viewer, Mr. Vinay Gupta of Gurugram, asking, should I buy HUL at current levels and hold for the longer term? Now, remember when the quarterly earnings came recently, the stock saw a fall of 7%. The margin guidance has been maintained by the company. They say that FY27 will be a better year than FY26. At least those were some of the commentary highlights fundamentally. How are you looking at this stock? It's been absolutely flat and has not moved in multiple years now. What would the outlook here be?
See, if somebody has a long-term horizon, by long-term, I mean at least 18 to 24 months, yes, these are very good levels to enter. Because these kind of depressed market, depressed performance of the stock for such a long period of time is a right opportunity for long-term investor. In the short term, there might not be any movement or maybe a cut of 10, 20 rupees. That's a different matter. But for long-term horizon, the kind of HUL companies are very good. A strong brand portfolio. Some of the brands are high margin brands. They are moving out of low margin brands, focus on premiumization. And the headwinds which were there from the last so many months or quarters, I would say, because of rural demand and all has gone. Even the fear of El Nino, which was there sometimes back, now the monsoon has taken. There was a talks of monsoon being shortfall of around 40% or so. That has also been taken care of. So I think these are right times to enter HUL, likes of HUL or maybe a Colgate, these 2, 3 Nestle. These 2, 3 stocks are very good for long term.
All right. So Rajesh over there suggesting that this is the right time to enter HUL. Now, the next question that's coming in is from Chennai. Kumar would like to know if he should buy all cargo logistics. Please guide. So, Kunal, what is your sense on all cargo logistics?
Well, it's a strong chart because I think on the monthly basis, the stock is exhibiting a very good comeback for itself. It's up 50-55% so far on a monthly basis. Short-term wise, for example, in the last, I think, a week or two, the stock has run up quite steeply. It's moved up from 10.5 levels to 12 plus where it's trading right now. So short-term wise, I would not recommend a buy. But if your time horizon is at least 6 to 12 months, then I would suggest to stagger your buying and look at current levels or a current opportunity. Current zone as an opportunity for you to invest into medium to long term. Time frame matters over here.
Okay, that's the outlook on all cargo logistics. On that note, time to take a breather on this edition of Buy Now, Sell Now. We'll keep the queries going with both our experts on the other side of this short break. Keep writing to us and we'll be right back.
Welcome back, and thank you very much for staying with us on ET Now. And Rajesh as well as Kunal both continue to be with us. Rajesh will be taking your questions on the fundamentals, and of course Kunal will be giving us a view from the technical perspective. The next question that we're going to be picking up is the one coming from Indore. Ritesh writing in to us. Now he has a broad question about Infosys. He's holding 50 shares of it. The entry price is 1,000, I beg your pardon, and the question is, should I hold or sell? So, Rajesh, perhaps would you like to give us a larger fundamental view on Infosys?
First of all, congratulations, because whoever we meet nowadays are setting in laws in IT companies. So anyways, for a longer term, if you have a long-term horizon, I think these are right prices to enter, because yes, we agree that the kind of growth which we have witnessed in the past is not there. But the best part is they have very strong balance sheet. The order inflows were very good, better than expected in this quarter too. And most of the large cap companies like Infosys, TCS, or HCL Tech, they are moving into. They have made announcement that they are investing into AI too, which was a very big concern for a few quarters back. So I think things have started improving, but yes, it will take much longer period of time, maybe 12 to 18 months sort of thing. So if you want a stable kind of investment with good dividend and all, one can continue to hold.
Okay, that's on Infosys. Continue to hold is the call coming in. Next up, Kunal, two stocks in question, and our next query coming in from Partha, writing to us from Durgapur, asking, should I buy BEL and Bellrise Industries at the current price for short to medium term? What would the outlook be for both of these names on the charts, BEL and Bellrise Industries?
I would recommend a buy for both of these stocks. BEL, looks quite attractive from the defense pack. The stock has fared up quite well. It's gone through a decent correction also recently, had fallen down to sub 400 levels, and now trying to inch back towards that 400 mark. Risk reward is positive. Defense sector overall, I think, looks to be attractive. So I would suggest that BEL could be a good bet at current levels. Bellrise also. Now the only thing which is as a strategy which I would recommend would be to try and scatter your buying over here for Bellrise, because the stock has recently moved up quite well. We saw the stock moving up from sub 200 levels to 230, 235 approximately in the recent highs for the stock. So it looks like that the stock is at the slight upper end of the price trend. I would suggest that you can start buying at the current levels. Use maybe a 5% dip, 6% dip as a point where you can look to average out further.
All right, so the next question that we are picking up is from Pratik in Mumbai, writing to us about RCF. The quantity he's holding is 300. The entry price is 141 rupees. Wants to know, he's got a one-year horizon. Well, of course, his entry price, he's already sitting at a tad bit of loss over there. Rajesh, what's your sense? Because he does want to know whether he should be holding it.
See, the numbers are not that exciting, and even the prospect doesn't look very good in the near future. The only positive with this company is the land monetization story, which has been going on since a very long period of time. And whenever that story comes into market, the stock starts moving. What I would like to say is fundamentally try to exit whenever these kind of stories start moving around 140, 145 levels. At this point of time, we continue to hold.
And any stock that you would, perhaps place your bets in this segment?
In this segment, I think Coromandel is a better bet, or even one can go for EID, which have a play of both sugar plus, since it's holding in Coromandel of around 56, 58 odd %, and the fertilizer space too. So you have a play for both in EID pair.
Okay, that's the take coming in over there. Let's shift focus. And Kunal, next query coming in on the stock NMDC. We have Mr. Deep Chaudhary, who's writing to us from Dubai, holds 10,000 shares of NMDC, entry price at 84 rupees per share. As of now, the stock is at 85, so it's actually not done all that much since he's bought it. His time horizon is 1 to 2 months. Should he continue to hold, or should he exit right now?
See, NMDC is a good stock, technically as a structure also. But it's just that the stock, has a tendency of remaining into sideways for 1 to 3 months on a trot. And recently also, I think we've seen the last 1 month, the stock remaining into a patch of consolidation. So the chart history for the stock is quite stable, quite positive on the long-term basis. Of course, it's not a very high beta chart or high beta stock. It's relatively a low to moderate beta chart on a stock for NMDC. I would recommend a hold. Maybe I think the only catch over here is that your time frame could probably have to be extended from 1 to 2 months to maybe 2 to 4 months or 5 months or so, because in that time span is where I would expect the stock to come out of this consolidation and then head back towards an upside. On the higher side, I would look at 95, 96, which is the previous major swing high 3 months back for NMDC. Those levels could be tested whenever the stock resumes its uptrend.
All right, the next question is from Raghavan in Chennai. The stock in question is Zensar Tech. It holds a quantity of 100 shares. The entry price is 592. Should I hold or sell? Well, he's already, sitting at a bit of loss, Kunal. What would you advise him? Should he hold on or sell it and exit?
I'll suggest to hold on to the stock. I'll not suggest an exit on the stock price because I think Zensar Tech is trying to come back into some bit of recovery over here. There could be a possibility that the stock may scale back towards at least its 200 moving average. If that happens, it should land up somewhere around 575, 600 range for Zensar Tech. So the stock seems to have seen some decent volumes on the weekly charts in the past few weeks. There could be a retest towards the 200 moving average that will get you closer to your cost price.
Okay, that's the take on Zensar Tech on the charts. On that note, time to slip into a very short break on this edition of Buy Now, Sell Now. Keep your queries going and we'll address all of that and much more on the other side of this very short break. Back with Buy Now, Sell Now, and we still have both our experts, Rajesh as well as Kunal, back with us on the show. And now we've got a phone query coming in. A viewer is calling us live. Mr. James is calling us from Hyderabad. And Mr. James, hi, good morning. Thank you for calling us. Ask our experts what your query is and the stock that you would want an opinion on.
Madam, namaste, madam. Good morning, madam.
Good morning.
Madam, M&M में फ्रेश एंट्री में लेना बोल के चाह रहा हूँ मैडम. शॉर्ट टर्म में कौन सा रेट में लेना बोल के पूछा फोन करे थे मैडम.
Okay, let's answer this query with Kunal. Kunal, our viewer, Mr. James from Hyderabad, is looking for a short-term view on M&M. Would now be a good price to enter or should he wait for a bit?
See, I'll answer the question in Hindi because the viewer also, I think, asked in that kind of a tone. So I would believe, मेरे हिसाब से I think 3,300, 3,400 का ये जो रेंज है, ये एक अच्छा रेंज है M&M के लिए. 200 मूविंग एवरेज के ऊपर ट्रेड कर रहा है. जनरली हम कहते हैं कि जब स्टॉक्स अपने लॉन्ग टर्म एवरेज के ऊपर ट्रेड करते हैं तब उनके चार्ट पैटर्न्स काफ़ी डिसेंट होते हैं, स्टेबल हो जाते हैं वो स्टॉक प्राइसेस. तो मेरा मानना है कि M&M एक अच्छा बेट बन सकता है. बट अगर आप बाय करना चाहें तो 3,400 से 3,300 के बीच में आपके बाय ऑर्डर को स्प्रेड कर दीजिए. लगभग 3,350 का अगर एवरेज पे मिलता है तो मेरा मानना है कि वो अच्छा बाय प्राइस बन सकता है M&M के लिए.
All right, Rajesh, is there something that you would like to add on the fundamentals of this?
Very strong fundamentals, I would say. It's one of the strong performer in the auto space, doing very well, not on the passenger vehicle side also, but in the tractor side also. Rather, I would say it has outperformed its peer groups in the recent quarters. And for long-term horizon also, we are very bullish on this. So 1 or 2 months, Kunal is a better person to say, and he has said that. But for a longer-term horizon, it's a buy.
All right, so on the long term, it is a buy. Let's now pick up. I hope we've been able to answer his query. Now, moving on, we have a question that's coming in from Chandigarh. Kirtan is writing in. The stock in question is Gland Pharma, holding 71 shares. The entry price is 2827. Now, the question is very, very specific. He says, why did the share fall all of a sudden from 2875 to 2,800 rupees on the 24th? And what are the targets of the stocks for the next quarter or the full year? I think, Kunal, that's a very specific question on the technicals. How would you like to respond to that?
See, I think it's a developing chart for Gland Pharma. Now, if you're worried about the correction which happened potentially the last week or so, go back to 2022. And from there, if you see the stock from 4,000 fell almost consecutively for 6 quarters or 7 quarters towards 861. So it's the nature of the stock price to be a lot more volatile. Thankfully, I think would sense that the volatility has reduced for Gland Pharma in the last, I think, few quarters. of the prices, recovering from those 860, 870 levels to now almost 3,000 odd for the stock price. But if you ask me, I think the stock, as I said, it's a developing chart. There could be a possibility that the stock for the next maybe 1 month or so could remain a little bit more sideways. It's formed a near-term resistance or a top around the 3,000 odd mark. But once this consolidation is over and the stock resumes its uptrend, I would sense that the stock should be good for targets of 3,300, 3,600 also. So it depends on how much time the stock takes to consolidation. But potentially, I would sense that whenever the uptrend resumes, 3,300, 3,600 could be a target range for the stock.
Okay, those are levels to watch out for in the upside for Gland Pharma. Rajesh, coming to you for the next query. Mr. Piyush is writing to us from Delhi asking at what price should I buy Viatech Wabag for the longer term. Now, last 1 month, the stock has been absolutely flat, but in the last 6 months, it's seen a jump of 60% almost. Looking very good for Viatech Wabag. How much more upside potential are you seeing here? And what would be a good price to enter for the longer term?
See, first, let's talk about the company. It's a very strong company. I would say the Indian multinational working on a water solution business. Strong order book, not only domestic, but also foreign order book also. And with the government's focus in water and all, I think these companies are going to do well. Entry point for a long-term horizon, maybe by long-term, I mean when you're talking about 1 year, 2 years down the line, I think 10, 20 rupees here and there doesn't matter much unless you're looking for the short-term trading opportunities. So for long-term horizon, it's a very strong company. Buy from a side. If you want to be on a safer side, wait for at least 5% kind of correction. And as far as not doing anything in the recent past, the stock on the bourses, that's the problem with the entire market, I would say. The market is not moving as such in either way, neither upside nor downside in the last 1 month or so. It's very frustrating. So forget about that. For a long-term horizon, it's a buy. If not in a lump sum, go for a staggered buy.
All right. So the next question that we are picking up is coming in from Naveen. He's writing to us from Tamil Nadu. The stock in question is Kaveri Seed Company, holding a quantity of 45. The entry price is at 457 rupees, and the time horizon is a long term. Rajesh, would you like to take this one? You know, the stock does seem to have declined over the past month, and he has a long-term horizon.
See, for long term, it's a strong stock, no doubts on that. But around 820, 830 odd rupees, I think the fundamentals at this point of time would be fully discounted. Unless you are comfortable seeing some amount of correction after that, I think one can continue to hold. Or a better choice would be sell around 820, 830 odd levels and re-enter when it goes down.
Okay, that's the take coming in on Kaveri Seeds. Let's move on to the next stock query that's coming in from Mr. Ajay Singh. The stock in focus is Balkrishna Industries. He holds 330 shares of this stock. Entry price at 2389. Stock currently around 2353. So nominally 20-30 bucks lower than where he had bought it. But the last 6 months also the stock has given a decline. Last 1 month, however, there's been a very sharp recovery, 16% higher. Kunal, his question to you is it a good time right now to add more at the current price?
Yeah, it's a decent time to add the stock because it looks like it's the 4th week of price correction. And on the 4th week so far, of course, it's the start of the week. So a little early to say, but then whatever we're seeing as a pattern is that the stock has formed a doji kind of a pattern, which means that there's been finally a fight back from bulls with respect to the recent price downtrend. I'm specifically looking at the last 2-3 weeks. And the trend prior to that was quite strong, where you've seen the stock recovering from 2,000 levels to almost 2,500 in a matter of 1 to 2 weeks. So after a rally, 3-4 weeks of price correction, which is the natural way the stock cools off, I think it's a good price where you can look to enter. My sense is that whenever the stock resumes this uptrend, it should at least try to retest the previous highs, if not scale past about those levels of 2,500.
All right. On that note, we slip into a very, very short break, but do keep those questions coming and we will try to get our experts to answer as many of your stock-based queries as possible. Well, thank you very much for staying with us on Buy Now, Sell Now. You're watching us on ET Now, and we have our experts, Kunal and Rajesh, still with us. They're answering your questions, and without much ado, let's move on to the next one. We've got Parth Hatman writing in from Punjab. The stock in question is Tata Power. He's holding a quantity of 30 shares, bought them at an entry price of 380. Now, I think he wants a very broad view on what should he be doing with the stock. So let's take a fundamental check with Rajesh first, and then we'll come to Kunal. So Rajesh, what are your words of wisdom to him?
Strong buy, I would say, for a long-term horizon. Short-term, it's not doing anything, but with the kind of capacity it has into thermal as well, moving into renewable, it's a very strong company fundamentally, I would say. At these levels, it becomes a very good buy. But you have to have a time horizon of at least 12 months. So if you have that kind of time horizon, it's a buy from the sector.
All right, so if you have patience, do hold on to it. Kunal, how are the technicals looking on it?
Yeah, I think Rajesh partly answered it that the stock is not doing anything on the short-term charts. I'll agree over there. I think 390 is a breakout point for Tata Power. If you're looking at this as a short-term strategy and wanting to add further, I'll suggest to add on the stock once it breaks past above the 390 mark.
Okay, those are some levels to watch out for on Tata Power, and that's what your trading strategy over there should be. Shifting focus then, the next query coming in from our viewer PR Subramanian. Stock name is Bank of Baroda. Quantity held is 390 shares at an entry price of 261 rupees per share. The question our viewer is asking, and Rajesh, you take this one. He's asking, shall I hold the stock for a year, or is there any scope for better performance? Else, is it advisable to sell this one and reinvest in other banking names like SBI or perhaps an Indian bank?
See, first, Bank of Baroda has been doing well, no doubt on that. The numbers have been pretty good. Balance sheet has been cleaned after the acquisition of Vijaya Bank and all. The size has also become big. But you have valid question, switching to some other bank. And I would say switching to either Indian bank or Bank of Baroda or even Bank of Maharashtra would be a better bet when compared to Bank of Baroda on terms of returns and all. These three banks are doing very well. The numbers have been pretty good. In fact, Bank of Maharashtra has been giving strong numbers quarter on quarter from the last so many quarters. So try switching to any of these three banks for a better return.
Okay, the next question coming in from Somnath Mukherjee from Kolkata. The stock name is ITC. He's holding 1,500 shares of it, and the entry price is 147 rupees. The question is, what is the future like? Do I hold or reduce slowly? So, Kunal, would you like to take this one?
I think first of all, congratulations to the viewer, because buying ITC at 147, the stock I think at one point went up to 500 plus also, and you still managed to hold on to the stock even when the stock has corrected from those 500 levels to currently sub 300 mark, 270 thereabouts. So it's been a rough journey for ITC as such, but I would believe that this level of 250, 260 for ITC I think is a good support where the stock has originated. The stock is showing signs of a triple RSI divergence on the weekly, monthly charts, which means potentially in the next 1 to 3 months, the stock should be able to form a near-term bottom for itself, as well as start to show any signs of a major rally or a recovery. Since you purchased at significantly lower levels, I would suggest to hold on to the stock and revisit the stock once it starts off into a decent rally mode. And then, assuming if it rallies up 20%, 30% from the current levels, 330, 350, thereabouts, that could be a better point where you may want to consider booking profits.
Okay, that's the trading strategy when it comes to ITC. Let's shift focus, and Mr. Madhukar Manuru from Hyderabad is writing to us. Rajesh, you take this one. Please suggest levels to buy Gravita India for a 2-year period. Asking, is it a good investment? Rajesh, you track this stock? Any view on Gravita India?
See, this company into recycling business is doing very well from Jaipur. But at these valuation, I think for investment purpose, I think all the fundamentals have already been discounted unless some new corporate action or some new expansion plans are announced. Trading, there might be opportunities here and there, but for investment, long-term horizon, I think it's better avoided.
Note, long-term investment is an avoid, but trading strategies could emerge. Kunal, any trading strategies being indicated on the charts for Gravita India?
Yeah, I think about the 1900 mark is a good strategy to go for a buy on the stock. It's recovering to be quite a decent chart. It's been more consolidative over the last, I think, couple of years. Have been fluctuating around the 1900 resistance on the upside, and then I think 1400 approximately was the steepest low the stock has made on the monthly chart basis. So it looks like that the stock is nearing towards a breakout. It's better to wait for another 5%, 6% upside for the stock. Let it confirm this breakout above 1900 mark so that you won't be stuck into a time-wise consolidation again. But then momentum would come back again above 1900 levels.
All right. The next question that we are getting is from Punjab, and Sandeep Anand is writing into us. The stock in question is Vishal Mega Mart. He's holding a quantity of 200 shares and entry price of 113 rupees. Well, he's, it's almost flat as far as he's concerned because not making much of a profit there. But Kunal, would you like to give us, a view on how the charts are looking for this one?
In fact, I was mentioning this yesterday also for Vishal Mega Mart when the stock was up some 8%, 10%, post the news flow for the stock price, that the near-term trend for the stock is still negative. It opened with a gap up. It remained up on the upside, even with the news flow. But then eventually what happens is once the news settles out for the stock price, the stocks come back and resume their previous trends, and which is still on the negative side for Vishal Mega Mart. So I would believe that you can, since your purchase price is very close to the cost price, you can hold on for another couple of days. But if it comes very closer to your cost price or slightly in profit, that could be a good time where you may want to consider booking out and moving to something else.
Okay, that's the trading strategy on Vishal Mega Mart. But on that note, I'm afraid we're completely timed out on this edition of Buy Now, Sell Now. Rajesh, Kunal, thank you so much for joining us and sharing your expertise with our viewers. But on that note, viewers, thank you so much for tuning in to Buy Now, Sell Now. Keep writing your queries to us and we'll address them tomorrow with a new set of experts on the show. But until then, thanks so much for watching. Keep watching ET Now. Markets at Noon is up next.